You know, usually when we look at data, there's this expectation that a chart is, I don't know, a definitive record, like a photograph.
Right, yeah, like it's totally fixed.
Exactly. You take a picture of a storm and you can point at the clouds and say, well, that's what happened. The wind blew this way, the rain fell right there.
It's historical. And we like to look at the past and pretend we understand the forces that shaped it,
Hmm.
because it gives us this sense of control.
But then you step into the world of high frequency trading, and suddenly that photograph is just entirely
Oh,
useless.
completely useless.
We're no longer looking at a picture of a storm. We're standing inside a glass box in the middle of a literal tornado, trying to predict which way the wind is going to violently shift in the next, like, 5 seconds.
That is a very accurate way to put it.
Which brings us to our mission today. Welcome to today's deep dive. Today, we are peering behind the curtain of what is quite literally called microstructure warfare.
Sounds intense, right?
It really does. And we've got a fascinating stack of sources to guide us through this. First, we have a feature manifesto for this highly advanced trading platform. It's called 3D NES Meta V7.
Yeah, quite a name.
And second, we have this highly specific boots on the ground combat manual for scalping Bitcoin on a crypto exchange called Hyperliquid, specifically over the weekend.
It's a really compelling pairing, actually, because we have the theoretical computational capabilities of the software on one hand,
Right.
and then the gritty practical reality of how a human operator actually attempts to survive a hostile trading environment on the other.
And for those of you listening, I want to say, even if you spend zero time looking at stock tickers or crypto markets, you should stick around. This deep dive is a masterclass in how complex data is visualized.
Oh, absolutely.
It's about how AI processes reality at sub-second speeds, and ultimately how psychological manipulation works when it's just completely automated.
We are exploring the massive gap between everyday retail traders looking at flat, lagging charts
Mm-hmm.
and the institutional algorithms playing, well, essentially three-dimensional chess.
Three-dimensional chess at light speed.
Exactly.
Yeah.
And that gap is the core tension of modern markets. The everyday trader is fighting with tools that are fundamentally mismatched against the environment they're entering.
Yeah.
I mean, they're looking at shadows on a wall while the institutions are looking at the objects casting those shadows.
Okay, let's ground that with an analogy. Trading on a traditional 2D chart it's like reading a Wikipedia summary of a battle after the treaty is already signed.
That's a good way to look at it.
You see a green candle or a red candle, and it just tells you where the price was. It's the aftermath. But trading on this Nexus V7 platform, it's described like flying a drone over the battlefield in real time.
Right, you're watching the troops physically move into formation before the first shot is even fired.
Exactly. And what's fascinating here is that the platform treats the order book as literal physical terrain.
Yeah, and for context, the order book is simply the master list of all the buyers and sellers waiting to trade at various prices. But this platform forces the human brain to stop processing numbers on a spreadsheet and start processing topography.
So in this environment, a flat area on the map isn't just an absence of orders.
No, it's rendered as a vacuum.
And a vacuum is really dangerous, right? Because if there are no orders sitting there to absorb buying or selling pressure, the price can just rip through that empty space instantly.
Precisely. It's free fall.
Hmm.
And conversely, a massive cluster of limit orders isn't just a big number anymore. It's rendered as a towering wall.
A literal wall on your screen.
Right. It visually becomes an obstacle or a magnetic force pulling the price toward it. And the platform uses 5 distinct visual modes to convey this.
Hmm.
The flagship is the surface mode, where the bids and asks look like this living, undulating skin.
Wow. But the sources also detail a wormhole flight mode, which I just find conceptually amazing.
That's wild.
You are literally flying down a 3D tunnel of liquidity. Like the current price is your flight path, and the order walls are rising up around you like neon skyscrapers.
Yeah, and you can physically see if the canyon is narrowing, meaning buyers and sellers are closing in on each other, or if it's opening up.
That is just so sci-fi. And they pair that with an X-ray layers mode, right?
They do. That allows you to visually strip away the surface to see the actual age of the liquidity.
Wait, so you can see how long an order has been sitting there?
Exactly. You can see if a massive buy wall has been sitting there for hours, like it's building a foundation, or if it just popped into existence a millisecond ago.
Which changes everything.
Totally. And there's also a footprint gate for tracking actual traded volume and a canyon mode where the buy and sell sides just face off across a literal cliff edge.
What strikes me about all this is how it alters human cognition. Because, we are evolutionarily wired to understand physical threats.
Right, a wall, a cliff, a narrowing tunnel. We get that.
We aren't wired to read scrolling green and red numbers. And it's not just visualizing one data feed either. The platform utilizes something called an aggregate multi-exchange V2 feature.
This is a huge deal.
Right. It takes 5 different venues, Binance Spot, Binance Perps, Bybit, OKX, and Hyperliquid, and it just mashes them into one single 3D topographical map.
Which solves a massive blind spot for retail traders. Fragmented tunnel vision.
Because if you're only watching one exchange,
You might think the market is totally calm. Meanwhile, a massive sell-off is already ripping through another exchange, and you're oblivious.
and for those unfamiliar, when they mention perps, they're talking about perpetual futures.
Right, those complex derivative markets where people bet on the price without actually owning the underlying asset.
So the software is merging the basic buying and selling data with the high-stakes gambling data. It's compiling like 18-plus distinct data sources in total.
Yeah, and by rendering all of those massive crypto venues onto one 3D surface, the software actively tracks divergence.
Divergence between the exchanges.
Exactly. If the aggregate reality of 4 exchanges shifts down, but one exchange is lagging behind by even a fraction of a second, the software flags that as an arbitrage window.
So it physically highlights the distortion in the map where you could say, buy cheap on the slow exchange and sell high on the fast ones.
Yes. But here is where we hit a biological bottleneck.
Right, human reflexes.
Exactly. We have this incredible 3D map. We can see the canyons, the skyscrapers, the vacuums. But a human brain simply cannot calculate the aggregate trajectory of 18 data feeds in half a second.
It's just impossible, which is why the platform integrates an AI swarm.
Seeing the battlefield is one thing, but this software brings in literal artificial intelligence to read the map for you.
They call it the Prediction Oracle V2, and it moves beyond just visualization into probabilistic forecasting.
Right, it runs predictive models on the order book, projecting the probability of a price move across 6 different time horizons simultaneously.
So it's attempting to project the shape of the market 5 seconds out, 10 seconds, 30 seconds, all the way up to 2 minutes.
Yeah, and it utilizes a Nexus swarm of 5 specialized AI agents. And they have these incredibly aggressive names.
Oh yeah, the Iceberg Assassin.
Spoof Warden.
The Absorption Sage. It sounds like a video game. And the documentation notes these agents run on Cerebras, which is specialized hardware designed for massive sub-second AI inference speed.
With Grok as a fallback system to ensure zero downtime.
Right. And then a consensus overlord takes all 5 agent opinions and synthesizes them into one final verdict. But, okay, I have to push back here.
Go for it.
This sounds suspiciously like a magic 8-ball. Like, does it just print money by telling you the future? Isn't that too good to be true?
That's a very healthy skepticism. And the sources emphasize that this isn't a crystal ball at all. It is purely a highly disciplined probability engine.
Okay.
It doesn't know the future, it knows the math of the present. And that is the domain of the system's quant engine, which calculates institutional metrics live.
Metrics that usually require a PhD in mathematics to even process.
Exactly.
Well, let's break some of those down because the jargon is pretty heavy here. The documentation mentions Kyle's Lambda. What is that actually measuring?
Okay, so Kyle's Lambda measures price impact. Think of the market like a body of water.
Okay.
If you drop a pebble into a huge lake, there's barely a ripple. That's a highly liquid market. But if you drop that exact same pebble into a tiny puddle, the water splashes everywhere.
Oh, I see.
So Kyle's Lambda calculates how much the price will splash or move if a specific volume of orders hits the market right now.
So it's constantly measuring how deep the water is.
Precisely.
Got it. And what about the Hawk's branching ratio? Because that sounds like, I don't know, forestry.
It really does, but it's actually a model often used to predict earthquakes or even viral contagions.
Wow, really?
Yeah. In trading, it measures trade clustering. If one aggressive trade happens, what is the mathematical probability that it will infect the market and trigger a cascade of panic selling or, FOMO buying?
FOMO being fear of missing out. So it's calculating the herd mentality in real time.
Exactly. It measures the self-exciting nature of the order flow. And then there is VPI.
Volume synchronized probability of informed trading.
Right.
Now, how does an equation know if a trader is informed? Like, is it tracking insider trading?
Not explicitly, but it tracks the footprint of it. VPI analyzes imbalances in the order flow.
Okay.
If there is a sudden massive wave of directional buying that completely deviates from normal random market noise, The math infers that the people deploying that much capital, they know something the rest of the market doesn't.
So they are informed.
Yes.
Which brings us to the platform's defense mechanism. Because the documentation defines something called a toxic regime.
This is crucial.
If VPI crosses an 80% threshold, it means the order flow is so aggressive, so overwhelmingly informed, that the environment is considered toxic.
And in a toxic regime, standard technical analysis fails completely. The system realizes that regular trading patterns are likely traps being set by institutional algorithms. So the software actively suppresses its own normal buy and sell signals. It throws up a warning light, essentially saying, the big fish are feeding, get out of the water.
It literally protects the user from their own urge to trade.
Exactly.
So we have a 3D map, the hardware-accelerated AI swarm, and the quant engine analyzing the water toxicity. Now, how does a human actually deploy this without getting crushed?
That brings us to our second source.
Right. The highly specific scalping manual written for trading Bitcoin, specifically BTCUSDT, on the Hyperliquid exchange over the weekend.
And the timing is critical here. Why the weekend? Well, institutional desks and traditional finance are largely offline during the weekend.
Right.
Consequently, the real organic liquidity in the crypto market thins out significantly.
And going back to your puddle analogy, when the water is thin, you don't need a massive boulder to make a splash. You can move the market with much less capital.
Which makes the weekend a total playground for high-frequency trading algorithms.
The HFTs.
Exactly. The manual notes weekend sessions are notorious for sharp synthetic price movements. They have these micro stop runs where the price dips just enough to trigger retail traders' stop-loss orders and just heavy manipulation.
It is an intensely adversarial environment,
Very right.
which informs the absolute core operational rule of this manual. It states, trade the 3D reaction, not the signal alone. The manual literally says a signal without context is noise wearing a neon jacket.
I love that quote. And it's a profound shift in trading philosophy. A retail trader is conditioned to see a BUY alert and immediately execute the trade.
Here's where it gets really interesting, though. An 85% confidence BUY signal from the AI isn't a command. It's just a flare illuminating a specific spot on the battlefield.
Right.
You have to look at the 3D canyon and ask why the signal fired, and the psychological discipline required to stare at a flashing AI alert and have the restraint to say, no, the terrain doesn't support this, that is massive.
It is. The trader's job transitions from predicting price movements to reading structural traps. Who was attacking? Who absorbed the attack? What order wall vanished? Who is trapped?
Let's decode those specific traps, because the manual outlines exactly what these manipulation tactics look like visually.
Yes, let's get into the tactics.
So if spoofing is all about projecting fake strength to manipulate human psychology, how does the 3D map expose it?
Okay, so the manual refers to spoofed orders as inflatable mountains.
Inflatable mountains.
Yeah. Imagine you were looking at the 3D surface, and the price is dropping. Suddenly, a massive, towering wall of buy orders appears just below the current price.
Okay.
To a trader looking at a standard order book, this looks like an impenetrable floor. They think, oh, the price can't fall past that massive buyer. I should buy right now before it bounces.
So the inflatable mountain acts as a magnet.
It draws in retail buyers, which naturally pushes the price back up. But the moment the price actually gets close to that massive buy wall, the orders vanish.
Just poof.
They are canceled in a fraction of a millisecond. The wall was never real. The algorithm projected fake demand to trick retail traders into pushing the price up, allowing the algorithm to sell its own assets at a premium.
But the Nexus software catches this because the visual wall just vaporizes on the screen, and the spoof warden AI instantly flags the abnormal order-to-cancel ratio.
It literally sees the mountain deflate.
Now, what happens when an institution actually wants to move massive volume without anyone noticing? I imagine they have to do the exact opposite of spoofing.
They do. And the manual calls these icebergs, or as it poetically describes them, a tiny castle, endless bricks.
Tiny castle, endless bricks. Wow.
Suppose an institution needs to buy 10,000 Bitcoin. If they put that massive order on the public book, the market will panic buy ahead of them, driving the price up and ruining their entry point.
Right. Everyone would see the whale.
Exactly. So they use an algorithm to slice the order into tiny pieces, only showing, say, 10 Bitcoin at a time.
So on a regular flat chart, you just see a tiny little order, nothing threatening at all.
But as soon as someone sells them those 10 Bitcoin, the algorithm instantly reloads another 10. And then another 10.
It's relentless.
On a traditional chart, you just see the price inexplicably stalling. But on the 3D terrain map, you see a small, unassuming ridge of liquidity that gets hit collapses, and instantly rebuilds over and over again.
And the Iceberg Assassin AI spots this cyclical reloading, the endless bricks, and highlights the hidden institutional presence.
Precisely, which perfectly transitions into the concept of absorption. The manual has a very specific warning about how traders misinterpret market action here.
Yeah, most people assume that if the AI flashes a bullish signal, it means buyers are aggressively pushing the price up.
Which is the logical assumption, normally. But in the context of microstructure warfare, a bullish absorption signal actually means the sellers are failing.
Wait, sellers are failing. Unpack that for me.
I imagine sellers are aggressively attacking the market. They are throwing market sell orders trying to drive the price down, but they're hitting a massive hidden buy wall.
One of those icebergs.
Yes. The wall is absorbing every single blow, and the price isn't dropping a single cent. The sellers are exhausting their capital against an immovable object.
Oh, I get it.
That is bullish, not because buyers are pushing, but because the sell side is depleting its ammunition.
And if we connect this to the bigger picture, the manual ties this to the psychology of trapped fuel.
Yes.
Think about a fake pump on a Saturday afternoon. The price suddenly shoots up into a massive hidden ask wall. The AI flashes an absorption signal. What just happened?
Well, late retail traders saw a green candle, felt that fear of missing out, and bought in aggressively.
But the institutional sell wall absorbed all their buying power, so the price just stalls out.
And now those late retail buyers realize they are stuck at the top of a peak that isn't going any higher.
Right.
They panic and sell to cut their losses, which ironically creates the exact downward momentum the institution wanted to profit from in the first place. The retail traders are the trapped fuel.
It's just brilliant and ruthless.
It leads to the manual's guidance on delta spikes. Delta simply refers to the net difference between buying volume and selling volume. A delta spike means a sudden, aggressive burst of buying or selling pressure.
Now, my instinct would be to just ride the wave. If I see a massive spike in buying volume, do we just ride the wave?
That instinct is exactly what the algorithms prey on. The manual draws a hard line here. A delta spike into an empty vacuum, meaning the 3D map shows very little liquidity ahead, is true momentum.
So the path is clear. You can ride the wave.
But a delta spike into a massive wall, the manual calls that a lie detector.
It's a lie detector to see if the wall holds or breaks.
Exactly. If the aggressive volume spikes into the wall and the wall holds, the lie detector confirms the wall is real, and the aggressive buyers just became trapped fuel.
Wow.
If the volume spikes and entirely consumes the wall, breaking through to the other side, then the momentum is genuine. The spike itself is not the signal. The structural reaction to the spike is the signal.
Okay, but seeing the trap is really only half the battle, right? I mean, if an iceberg reloads in a millisecond or a spoof mountain vanishes instantly, a human hovering their finger over a mouse is already way too late.
Way too late.
So how does the manual suggest handling the actual execution of the trade before the HFT algorithms beat them to it?
This is where the platform evolves from an analytical radar into an automated weapon. It features the auto trading engine V7.
Right.
You can tether it directly to the AI signals, but you configure it with extreme prejudice.
You set the rules of engagement. You tell the engine, hey, only execute a trade if the AI swarm has 80% consensus. The quant engine confirms we are not in a toxic regime, and we are reacting to a validated lie detector test.
And when those highly specific mathematical conditions are met, the machine pulls the trigger for you in milliseconds.
It completely bypasses human latency.
Completely. And it deploys protective measures instantly. The documentation highlights a two-step TPSL system, take profit and stop loss.
Because in normal trading, you suffer from slippage, right?
Yeah, exactly. You want to buy at $100, but by the time your click registers on the exchange, the price moved and you bought it at 102.
The platform claims to eliminate that slippage.
It does. The instant the engine gets you into the trade, it slaps the protective stop-loss orders on the exact fill price before the market even registers you are there.
It also has a smart martingale system for stepping up size after losses, right?
Yes, and it even features a reverse mode for contrarian trading. If the weekend market is entirely comprised of fake outs and traps, you can literally instruct the engine to execute the exact mathematical opposite of the standard signal.
So what does this all mean? The most crucial feature of the execution engine isn't even how it enters a trade. It's how it forces you to stop.
The daily PL limits, the profit and loss safeguards.
Yes. The machine will auto-flat your positions, meaning closing everything out to cash, and literally shut its own trading capabilities down to lock and green days. Or, if you hit your maximum allowable loss, it shuts down to prevent tilt.
It removes the single greatest point of failure in any trading strategy: human emotion.
It prevents the euphoria that leads to over-leveraging after a win, and it physically stops the desperate revenge trading that happens after a massive loss. It locks you out to protect your capital from your own brain.
And the accessibility of this technology is staggering.
Oh, absolutely.
The documentation states this entire ecosystem, the 3D rendering, the Cerebras-backed AI swarm, the quant engine, the automated execution, it costs €599 for a lifetime access license, or €69 a month.
And it functions right in a browser.
Right in your web browser, you can skin the interface in a Bloomberg-grade PRO mode for this sterile academic look, or apply neon cyber skins so it resembles a high-end video game.
It has taken the kind of microstructure analysis that used to require a server rack in Lower Manhattan and just handed it to anyone with an internet connection.
It really has.
So let's bring all of these threads together. We started with the visual of a trader flying blind, looking at 2D hindsight, trying to guess the weather from a photograph.
Right.
And we've journeyed into an environment where you are flying a drone through 3D liquidity canyons. You have a swarm of mathematical AI agents acting as your radar, spotting inflatable mountains, decoding endless brick icebergs, and measuring the toxicity of the water in real time.
It's quite the journey.
It is. And the primary takeaway for you, the listener, whether you are trying to survive the weekend Bitcoin markets or simply navigating an overwhelming influx of complex data in your own career, is this. In a world of absolute information overload, having the right map of the terrain is a massive advantage.
But the map isn't enough on its own.
No, it's not. You have to understand the context. You cannot blindly follow the neon alerts. You have to evaluate the structural reality behind them. You have to know when a surge of energy is genuine momentum and when it is merely a lie detector testing an immovable wall.
Which brings us to the inevitable conclusion of this entire technological arms race.
Right.
3D NXUS Meta V7 effectively arms retail traders with the sophisticated weaponry of institutional algorithms. It makes the invisible traps visible. But consider the alternative future. If platforms like this become the universal standard, and suddenly the entire market can see the spoofed walls, the hidden icebergs, and the trapped fuel in glorious three-dimensional real time, what happens to the market?
Does the manipulation stop because everyone can see it?
I don't think so.
Yeah.
The institutions won't just stop playing the game. The invisible war will simply evolve into something infinitely faster and operating on dimensions we haven't even learned how to visualize yet. Something to think about until the next deep dive.